Hello, everyone. I wanted to welcome you to today's Storeganise webinar about payment migration. Thanks for taking the time to join us today. I'm John Contogiannis, Head of Growth at Storeganise. If you're not familiar with us, we are a property management software that helps self-storage operators save time, cut costs, and stay flexible. So whether you're just getting started or scaling quickly, our software adds value and can grow with whatever stage you're at today and whatever self-storage aspirations you have. Today, we're digging into a topic that doesn't always get a lot of attention that it deserves in self-storage. So customer payments as a part of a software migration. So I'll quickly set the stage of what we're going to talk about today with our guests. So pretend you're switching from one facility management system to another. What happens to the payment side? Is there another payments provider involved? Are they integrated? Aren't they? What does that mean? Is there a new payment provider? So all those questions that would come up. How do you communicate with your tenants on that migration? What are the best practices? What are the pitfalls? Things like that. So you can imagine this is one of those things that, if handled well, it can be seamless. But if it's mishandled, it can create a lot of friction for not just you, but your tenants. So I'm joined today by two fantastic guests who bring a ton of expertise to the conversation. Farney from Unwired Storage. Aaron specializes in data migration and automations for multi-site self-storage operators. So he can help you migrate platforms smoothly and, just as importantly, identify opportunities for automations that can lower your operational expenses. Aaron, say hello. If you want to add anything, please do.
Hi, everybody. Nice to meet you, and excited to do the webinar today. So I hope you find our discussion interesting.
Our other speaker is Mike Ermi. Mike is with Fortis, and he lives and breathes all things payments related. He is the payments expert, especially when it comes to embedded payment solutions. So think payment technology embedded in your PMS system. Mike has a lot of knowledge in payment technology in general, but specifically as well, platform migrations and compliance around that. Say hello, Mike.
Hey, everybody. I hope you're doing well. Thanks for having me, John and Aaron. I look forward to this.
Before we dive in, just a couple of quick notes. Feel free to use the chat. It should be on your right-hand side of your screen to connect with the other attendees. You can chat with them, engage with them. In the Q&A section, also on your right-hand side, the little icon with the question mark, please put your questions in there. I'll keep an eye on that throughout the session and do my best to get all your questions answered. If you do have a question and it's specifically for Aaron, Mike, or myself, please include that. Please include the person's name with your question. And if you hear something that resonates or doesn't, you can react with a comment or send up an emoji. Have fun with it. Just be nice. All right, so let's get into it. So we've set the stage. We know what we're talking about. The first question I want to throw at you, Aaron. Why is payments migration such a critical part of a platform switch? And how can operators turn this into a growth opportunity instead of just a technical hurdle?
Yeah. So, with any payment system migration or any software migration, your payments and your invoices are your lifeblood of your business. So obviously, if you mess that up, your revenue is not coming in on time. You've got cash flow problems. A lot of customer, CX customer experience related problems. You need to ask them to, retokenize, or they accidentally get into the collections process or something because you didn't process their payment properly. So it can create a lot of, just unnecessary headaches. And, to the second part of your question about the growth opportunity, that, if you're migrating, say, from maybe a manual payment platform or something that was partially manual to something more automated, just the extra time that you get back from the automated payment systems allow you to focus more on filling buildings and, raising rates, things like that. So yeah, you can use this to free up your time and make the customer experience better. and you can focus on more important things than sending invoices and trying to process payments manually, for example.
Mike, from the payment side of things, what do you think? How could this be used as a growth opportunity?
Well, certainly the goal is to make it seamless and simple, to where the customer can simply go in, put their information in, payments captured, and the information is tokenized to be used at a later time. That's really the key to payment success, is making it easy and simple and seamless.
And I'll just piggyback on that. I mean, a lot of business owners in general haven't reviewed their processing statements, haven't maybe interacted with their current provider. So now's a good time to just review all of that, to see where you're at, see where your rates are, see if you really understand what you're paying and why. So when you do migrate, that's a conversation you can have if you're switching to a new provider.
Correct.
Mike, you mentioned the word of the day, I think, and that's token or payment token. We're gonna focus on this a little bit. I want to spend a little bit of time because it's such a central part of the payment migration process. So, Mike, if you could help our listeners understand, what is a payment token, why is it an important part of the data migration, and what is the typical process of migrating these?
Yeah, simply all a token really is taking the card information and truncating it so that there isn't any exposure to the full number, and having a token per se or an ID in place of that number. And over the years, it's just gotten much simpler. Processors are working with each other. Some work better than others, but migrating from one processor to another and moving tokens is something that a company like mine would actually do on behalf of the customer, and work with the software provider just to make sure that all the fields line up. Once that is done, capturing new tokens within the software, within the system is super easy. When they go in and they put in their information for the first time, that information is captured. And when a token is captured, like I said, the information, the card number is truncated, and it resides on the processor's end. So you don't have to worry about breaches or credit card breaches or anything like that within the software that you're using.
So if you were the new provider, just to clarify, you would work with the operator's existing provider to transfer those tokens over you. So
Correct.
This doesn't touch the PMS, and it doesn't touch the self-storage operator's business as far as a data standpoint.
Correct. It's all built in within the software, and we just kind of handhold through the process. And then, once we get authorization from you to do it, then we will go to your current processor and make that transition happen.
Aaron, in your experience, what if it's not possible to get the token? So what if you're with a provider? So one scenario may be your provider charges for them to give them to you. They're kind of holding you hostage, for lack of a better term, or for another reason, maybe you just can't get them. What is the workaround to recapture your tenant's payment information?
Yeah, I mean, you have to do a manual migration. I don't recommend it. I've been through several of them. An example, last November, I had a customer who's also a good friend contact me and said, "Hey, I've got about 45 days. I need to switch to a new processor." He had about 3,000 customers. So within that 45 days, we needed to try and integrate a new payment processor into their checkout process. Token migration wasn't possible. They were saying it was going to take, they were holding it hostage, and they said it was going to take 3 months. So we had to manually migrate 3,000 customers. So this is where you have to contact everybody, give them the new place to re-tokenize, set them up on the new system manually. A chunk of your customers will do it. Maybe 50% or so will say, "Yep, great, no problem." But then you have to encourage a number of your customers to do that. Maybe provide some kind of incentive, an Amazon gift card or a discount or whatever it is to get another chunk of the customers over. Mm-hmm. But at the end of the day, you're going to have possibly 5 to 10% of your customers that don't migrate or you can't get in touch with. And, unfortunately, those you have to make a hard decision. What do you do? Do they churn? Do you put them into your collections process? If you can't get a hold of them, you can't get their payment migrated. It becomes a tough decision. If you've got 100 customers, it's a little bit easier to manage. But if you have, 1,000 or 10,000 or whatever, then it becomes a very difficult challenge. So token migration is always highly recommended.
Yeah, and I would say if you're going through this process or thinking of going through a PMS change, don't leave the migration of the payment side to the last minute. Start that process early so the process is more seamless and aligned with your PMS migration as well. Aaron, I'm going to throw another one at you, just more focused on the integration side of things. So integrated payments or embedded payments is kind of the new term that's being thrown around, or newer term. What does it mean when payments are integrated into the PMS? And what happens when you switch your PMS but keep your old, let's say, non-integrated payments provider?
Yeah, I mean that's a bit of a challenge as well. You could have reconciliation problems, reporting challenges. So a number of things when your systems aren't aligned. So where possible, you definitely would want to have your payments integrated to your PMS, and you'd want to make sure that your payment provider also provides that. Manual reconciliation, especially on the accounting thing, will eventually lead to discrepancies. I mean, it's nearly impossible to get it perfect. And in my opinion, it's just an unnecessary hassle. I mean, you shouldn't really set yourself up for failure like that if you can avoid it.
Yeah. And then Mike, maybe there's a situation where you're starting this migration and you reach out to your payment provider for the tokens and they say, wait, you're in a long-term 5-year contract. And by the way, here's your early termination fee. Any advice for folks that find themselves in that situation?
Yeah, termination fees can range anywhere from just a few $100s to as high as several $1,000s. Typically, the relationship you have with the processor will cover the termination fee for the customer. In the event that they want to charge, let's say, for a token migration, I would say 8 times out of 10, we would pay for that token migration to move over. I would never really be afraid of these early termination fees because they're truly not as excessive as the processor wants you to think that they are. They're not as high. It's just something that they try to do. And what we do is we give customers an option. So, if they want to be on a month-to-month, or in a lot of cases, we won't charge a termination fee. We just ask for a 30-day notice from the customer. So I wouldn't be too concerned about long-term contracts. I just don't think that the costs are that prohibitive.
So here's kind of a follow-up question to that. When they're looking at their rates or reevaluating their rates, I mean, there's kind of your more recent flat rate stuff, 2.89% and let's say 30 cents. And then you have your interchange plus. Just from a pricing 101 perspective, can you break down what's involved in the rate structures?
Sure.
So specifically, what's interchange? What's card brand network fees? Where does the markup come in? And where does that go? And I guess how do you cut through all of those details
Right.
to determine what you're really paying? So the overall effective rate, if you will.
Sure, sure. Everybody has the same interchange rate. It's just what you decide to mark it up. We all have the same transaction fees that go in and out of these different networks. There are literally hundreds of different card types. A debit card, for example, will have an interchange rate that's far less than, let's say, a Chase Rewards card. Where customers, I think where customers have a challenge is that is all the other fees that these processors will add. They'll add PCI fees, they'll add technology fees, they'll add statement fees, they'll add all these other fees, kind of like we just see on a utility bill or on a phone bill, that really are just what the processors are charging and not the actual brands itself. And that's where they try to get their margins. It's incredibly competitive. If you're an astute, you can read a statement. If you do a statement review, these are fees that you can eliminate by just shopping and finding a good partner. The other thing is every 6 months, Visa and MasterCard will go through the different brands and will do rate increases. And as a smart consumer, that's a question that you should definitely ask your processor. Hey, can you lock me in for a year? Or, can we work something out to where I'm not having my rates raised every 6 months? Interchange and flat have different advantages. If you're on interchange, if rates do go up, you're only paying that interchange, not, let's say, that 15 or 20 basis points markup, right? If you're on a flat fee, where you're paying flat for everything, the disadvantage can be if you're getting a lot of debit cards and not a lot of reward cards, right? You could be paying a little bit more. On interchange, when you look at your statement, it's kind of like looking through an encyclopedia. You've got literally just hundreds of different line items, right? And it can get a little confusing for a customer that's really busy and doesn't really know how to read a statement. So there are pros and cons to both. What I would say is dig into your statements and look at what excess fees are. There's a company called Heartland that just came out, and they're now going to charge a $495 a year technology fee just to use their technology, which is just incredibly excessive and unwarranted.
So, I mean, just as a quick way to check what you're actually paying in terms of the volume you're processing, if you take all the fees you pay and you divide that into your volume you're processing, whether you're on flat or interchange plus or whatever your structure is, that'll give you your effective rate, and you can compare what you're paying with your old processor versus your new processor as a cost of payment acceptance to your business.
Correct.
Aaron, I want to switch over from the technical kind of side of the conversation, and just from your experience, what can you share about best practices on how to communicate with customers about upcoming changes during a migration?
Right. Yeah. Obviously you need to communicate with your customers so let them know what's going on and any impact to them and their payments. So just depending on how much notice you need to give them. In a lot of cases 30, 45, sometimes 60 days in advance. With storage, you always have to be a little. You want to. You want to try and not remind them so much that they have storage, because that you all know that can lead to churn. So not sending invoices every month and doing the subscription charges like you have with Netflix or something like that is good. But yeah, your communication is key. You want to make sure that the process is smooth as possible, because if you have a clunky migration, or there's a large customer impact where they have to do a lot of different things to help you with the migration. You're making your problems their problems, so you want to make sure that you're not doing that. You want to make sure it's as smooth as possible. But yeah, just clearly and openly communicate with them, but simply as possible, and try to make the process smooth for them.
Okay. Do you have any numbers, or have you seen anything, Aaron, like just on churn from a migration point like that, or a benchmark of what to expect, or is it just depends more or less?
Yeah, it depends a little bit. So, for example, if you do a manual migration, there's always going to be a chunk of customers that you just can't get a hold of, or don't migrate over. You could be looking at, in some cases, 5 to 7%. If you can do a migration where it doesn't really require customer interaction, your churn should be minimal. You know, maybe a slight uptick because you're reminding them in storage, but I wouldn't imagine that it would be more than about 1% in that case. Assuming it's smooth, right? If it's a mess, then yeah, you're going to get more.
And we kind of touched on, okay, what if your tokens, you're being charged for them, or you can't get them for the migration, or maybe you're locked into a contract, which Mike gave some good advice on. But just all the all-in-one platforms, or vendor lock-in, as we call it in the software world. What are the risks of being locked into all-in-one systems, Aaron, and how can that affect how you automate processes, but also how you grow and scale your self-storage operation?
Yeah, I'm a big fan of best-in-class systems. With an all-in-one system, it's hard for them to do everything well. If you dabble a little bit in CRM, and you dabble a little bit in accounting, and you dabble a little bit in payments, so they tend to have a very static way of doing things. And so you have to do it the way that they tell you to. If you want a different, like if, for example, if you outgrow the CRM that's in a all-in-one platform, it's very difficult to bolt on another CRM that maybe meets your needs. For example, with the rise of social media, you need to do more with Instagram and TikTok and Facebook and Snapchat, and whatever new platforms coming out next week. You've got to be able to integrate these into your lead management cycle. So a lot of times with an all-in-one, if they're like, hey, we're not going to integrate TikTok or whatever the thing is, you're stuck, or you're left managing it separately, and then you have multiple systems to deal with that aren't integrated. So yeah, where possible, I always recommend a platform that's open. You've got open and documented APIs, and it just gives you a lot of freedom to do whatever you want. You're not locked in. You can pull out different components and replace them as needs change, as new technology comes out.
So, and part of this, what comes up in software is who owns the data? Does the platform own the data? Does the business owns the data? And that question does come up as well on the payment side of things. So, Mike, can you give us any insight in the world of payments? Who actually owns the end user, the cardholder's data?
Yeah, the customer owns the data. Processors don't own the data. When you tokenize a card, we're not capturing name, address, phone number, email address, and then taking that information and selling it. And one, it's completely legal on our side of the house. That's tokenized. Now, you can create an account inside of the software, but that account then has an ID associated with it, right? So I think the real simple answer is Your processor does not own customer data from a processor, right? Software, that's another world. Even though we're a software company, Fortis, with our technology, we don't own customer data.
Okay. So how do processors justify charging for, or I mean, on the flip side too, if a PMS provider is charging to release the reports of customer data so you can map it to your new PMS, and maybe Aaron, you can take this one, is how do they justify doing that if in fact the business paying for that software should own the data?
Yeah, I mean, sometimes it comes down to, the fine print in your contract. If you look at some of these, contracts, it talks about who owns the data, and it's a little, yeah, they try and kind of take ownership of the data a little bit, which just seems wrong to me. And then, other cases where, maybe they have a hefty fee to get access to the data via, I don't know, an API or a data carve or export or something like that. I mean, these are just all, I guess, just hostage tactics to try and, keep you in there. Um, which, in my opinion, it's just, it's just wrong, right? I mean, you need to have an open platform. You need to have, you just need to be transparent. At the end of the day, it's the operator's data, and yeah, people shouldn't try and hold it hostage. It's just yeah, a bad way of doing business, in my opinion, unfortunately. It's changing. I think it's starting to change more and more as these platforms, as I think customers become more aware of this. But yeah, still a ways to go in the industry.
Okay. So looking at this decoupling, who owns the data, beyond the billing and payments, Aaron, when we're looking at automations, whether it's through an API or a no-code platform like Zapier or Make, what opportunities do self-storage operators often overlook in things that in processes they could be using these tools to automate, to reduce manual tasks or make their life easier, or just reduce their operational expenses and improve efficiency?
Yeah, take existing customer inquiries, for example. It's the same, typically in most operators, 50% of the calls tend to be payment related. So, if the customer is able to self-service, understand what payments, invoices are overdue, outstanding, and then they can, they get a payment link right away and they can make payments. Once they process their payments, obviously this will send that to the gate system to unlock the door if they happen to be locked out. But anything payment related, you should be able to automate it, and you kill off 50% of your existing customer inquiries there. Other things like, getting gate codes. I forgot my gate codes, or having a customer portal, or some kind of, maybe, even if you're ready for an AI engine to serve up gate codes for customers that are lost, that eliminates a big chunk as well. Even on the sales process, automating some of the sales process, like a good online booking engine, or even, more and more AI agents that are, adding to this. But yeah, I think that there's a lot of opportunities in storage to automate your standard inquiries, because you tend to have the same 10 or 15 things over and over, and there's no reason to manually do that. Like, for example, no reason to manually process payments or copy data into another system for reporting. It should all be automated within your platforms.
From the payment side, Mike, just on the automation topic, just having I guess clarify, what is there a difference between integrated payments versus embedded payments? What are those differences, and how do embedded payments help drive better AR collection rates, accounts receivable collection rates, and just make it easier on the end user as well?
Well, let's talk about embedded and integrated being the same thing, right? Embedded and integrated into a software platform. It's having that real easy use of a portal that's embedded, right? So inside that portal, you can do simple things like do a refund, or submit a chargeback, or you can change a customer's mailing address, or input a new credit card, or if you're using the invoicing platform as an example, you can customize the invoice. So by having it embedded, you've got all these tools that are real easy to use. Another request is chargebacks. Customers get chargebacks, and a lot of processors today are requesting that they get faxed in, if you can believe that, right? So having the ability to go online just to dispute the chargeback and actually do it within minutes is something great to have. All of your reports and all of your rejects, and having it right there at your fingertips in a simple report just makes life easier. And these are really the big advantages of having an embedded solution. Being notified within the solution that a card's rejected, right, for some reason. Having a tool like Account Updater. A lot of folks will put their card, Aaron, I'm sure you can attest to this. They'll put a card in, forget about it, right? Not update it for when the new card comes in. Technology like Account Updater won't reject that card, but will update the new expiration date so that card isn't rejected. So, these are just a lot of the benefits versus just having a standalone authorize.net or NMI or some simple virtual terminal, but having a true embedded experience. Because that's the way it should be. You should never have to worry about your payments, right? It should be on autopilot. And then when there is a problem, there's one-stop shop you can go to that will solve them all. And then last but not least, if that doesn't work, just having a customer service on the back end that will answer the flipping phone and not put you on hold for 30, 60, 90 minutes for $100 problem that you have. And that is crucial. Customer service is everything in this industry.
And maybe you mentioned disputes and chargebacks. Any insights in the SaaS world, software as a service world? What are the most common reasons an operator or a business will get a chargeback?
You know what? A lot of times it's miscommunication, right? Where they thought that they were only going to be charged $150, but it was $250, or they don't recognize the name. And they're going, oh my gosh, somebody's using my card, right? These are the most common on chargebacks. And then, of course, there's always that customer that's just a problem. Just a problem, and he just wants to, create more problems. And unfortunately, we have those kinds of folks in the world. So having a tool that is online, that is simple to use, is really worth its weight in gold. And they are going to happen. But to summarize, the most common reason is if the company's name XYZ, but it shows up as another name charged on the credit card, that's the number one reason why there's a chargeback.
Yeah, so the descriptor is the technical term, and it recently happened to me. I'll share a quick story. I paid for a service and they charged my card, and I got my credit card bill, and it was this weird name. I called the bank. They gave me the phone number. I called the merchant or the business, and it was a nonprofit. I'm like, who creates fraudulent transactions in a nonprofit? So my bank didn't even know who it was. And it ended up, it was the name of the gateway the business was using to process the transaction. So it wasn't even the business name, it was the descriptor of the gateway. So I can attest to that being the reason. Aaron, I want to jump over to you. You've done some pretty large migrations, meaning a lot of units for a lot of different operators. On those larger scale migrations, is there a particular preferred order on how you migrate from a PMS to the payments, maybe to some other third-party applications they're using for additional services?
Yeah, I mean, on large scale migrations, it's obviously a bit trickier, and you need to plan things out more carefully. In many cases, the payment aspect of it can take a little bit longer and is a little bit more complicated. So in a lot of cases, you might want to start to work on that earlier, so you're not surprised a little bit later. But in my opinion, I think making the decision on both, let's just say the PMS, so you get your inventory management and your invoicing and your payment gateway, your payment provider and your payment gateway, making those decisions, at least making the decision at the same time, because you've got to consider integration options and timing and things of that nature. If there's no native integration between the two, you obviously need to allow for time for that to be built. Obviously, if you can pick a PMS and a payment provider that have already got a native integration, it cuts your migration time by many months. So that's always the preferred method if you can. But yeah, I like to make the decision at the same time. You tend to set these things up, almost in parallel, because it's difficult to have one go live before the other. You need to make your data migration and your cutover on your PMS at the same time that you spin up your new payment provider. If you try and separate them, you run the risk of missed payments, customer confusion, and all the things that can go wrong with a I don't know, an incremental deployment like that.
Mm-hmm. From your side, Mike, in your experience, what's the one thing businesses think will be easy about payment migration that never is?
That is something I need to chew on. That's a real good question.
What do they overlook? Maybe something they didn't consider. Maybe it's a timeline they think is going to be faster, or they think they're just going to be able to get their payment tokens. Anything come to mind, or maybe a recent experience you can share?
Well, if you are going to move your tokens, you've got to give yourself enough time, right? I think some people think that process takes a day or two. Now, while it will take us, 48 hours to do it once we have it, okay? It's through that process of having to wait on somebody else to give you that information. You're having to wait on that processor. I think people overlook that. I think you start that process earlier. Give yourself 7 to 10 business days to start the process. With a company like us, you're not being charged anything. You've got an account, but the clock isn't running with us. I think that's one. I think that if you invest 30 minutes to be trained on how to use that portal, it will save you a ton of time down the road, because it really isn't difficult. But if you show somebody how to log in, there's your username, password. Okay, here's where you handle your chargebacks. Here's where you handle your refunds, your returns, your credits, your debits. Oh, if you want, here's how you create an invoice. Here's how you set up a reoccurring billing. I think people skip over that process and don't invest that 15 to 30 minutes to understand how to use a portal. And it's something that any good processor, I know we do, offer training classes, as well as YouTube, instructional. Just take the time. And then you do that, and boy, you can really get your payments on cruise control. The other thing is really understanding how to really leverage the tools that are given to you by the processor. I think that's crucial. But I would say token and just understanding how your payment portal works, so that you can become an expert. You can become an expert in 30 minutes. That's how easy it is.
On your side, Aaron, I guess what are the major that you haven't mentioned already, like gotchas during the process that usually come up that operators don't typically anticipate or think will be easy?
I echo, what Mike said, time, allowing enough time. In many migrations that I've been involved with, we run into long release times on the other end. So the guy who's holding the tokens now, they drag their feet, or they're not responsive, or they say it's going to take us, in some cases, I've had cases where it says, oh, it's going to take us 3 months to release it. So there's a lot of challenges, related to that. I think it's getting a little bit better, where people aren't maybe necessarily holding things hostage as much as they have in the past, which is good. But yeah, time and not really planning that out. I think people, especially if you already have an automated payment gateway, I think people think, oh, it just happens magically without really understanding the process and the paperwork and everything to get this guy to talk to this guy and migrate over the tokens and communicate to the customer. So you're so focused on your operational things with, like, for example, a PMS. Sometimes you just overlook the time that's needed on the payment gateway.
And I think we talked a little bit about the importance of support. Support is one of those things you don't think about till you need it, and then if you don't have it, it's too late, and it's costly and it's frustrating, and it can lead to customer churn. So you've been in the industry, the payments industry, a long time, Mike. If I'm a business owner and I'm talking to some new payment platforms or providers, what are some immediate red flags? You're on mute, Mike.
Aaron, don't be mad at me, okay? AI bots, right? Sometimes these AI bots are not implemented properly. And it can be very frustrating, especially if let's just say, you have a customer right there, and the only support is an AI bot, right? I would be very careful with that. You've got companies like Stripe that their support is only messaging, but they say that it can take 24 hours for them to get back to you. When you're looking for a processor, you want two things. You want instant messaging, where it's a real-time agent that you're talking to, number one, and an 800 number that you can contact, in which that phone will be picked up within the first 3 to 4 minutes. Okay? Those are the things. When they start talking buzzwords about all these bots and this and that, payments can be a bit complicating and intimidating, right? So having a real-time person and real-time live messaging, which we offer, I think is the way to go. That is super key in this industry, and having support that whichever region that you're in, it's localized support is important.
What about I've heard this one in my days. We can offer you better rates because we have special wholesale interchange rates, so our costs are lower.
No, there's no such thing. There's no such thing. We live where margins in all of our industries with everything going on in the world are becoming more and more compressed, right? And I think folks who are on this call, if they actually opened up their statements to truly see what their effective rate is and what their costs are, okay, will be shocked. No such thing as wholesale interchange. We all have the same interchange. What you want to look at is what is your cost going to be over interchange and what are your other fees? Period. End of story.
On that note, Aaron, when we're just talking about PMS, let's switch over to the software side of things. When have you seen, working with so many business owners, so many operators, when do you see that it's time, or what advice can you give to say that it's time to reevaluate the PMS you're using and maybe look for something else?
Yeah. Okay. So there's a couple of scenarios. There, self-storage has been around since the 70s in the U.S. So for about 50 years. Why? And then there's a lot of softwares that have been around for say 20 years. So there's a number of these legacy platforms that are out there. While they have a number of features and good market share, but sometimes you tend to start to hit limitations with automations and things like that. So if you're on a legacy platform, I think it makes sense to have a look. But I'm never even though we do a lot with technology, I would suggest, hey, don't do a lateral move. It doesn't make sense just to move software, just to move software. You should always look and see, what you're going to get out of it, right? If you're able to do more automation where you have to spend, less time managing manual process, that's a big win. So anything that can be automated with a new platform is good. If you're able to get better lead handling or a better online booking experience, so you've got to really look at the benefits and the reasons why. So if you listen, I want to do this to keep up with competitors. I want to do this to get more deals or whatever it is. And if you're stuck or it's complicated or expensive with your existing platform, then yeah, it's time to go shopping.
Is it similar on your side, Mike? I mean, just when is it too costly? And maybe it's not payments in software in general. Maybe it is. Maybe it's just experiences you've had with businesses working with software. When is it just not worth it? When is it costing you too much? And how do you assess manual tasks as a cost to the business?
Well, manual tasks when we're in an era of automation is something that you have to really consider. My industry is a little different on the payment side. You've got all these large conglomerates now merging, and they're all publicly traded companies, and they all have to hit their numbers. And fees are constantly being raised, and costs are going up. I look at, am I having to do more work in this incredible technology age that we live in? And what is that costing me? And two, what am I paying? Am I getting what I'm paying? And that's how I really kind of look at the world. It's pretty simple, black and white. I've been in the payments business when they used to look up sheets. I'm older than most people probably on this call. You used to look up on a piece of paper, and it was a month old, to see if that credit card was a bad credit card. And then you would swipe it through a knuckle buster. That's when I started in this industry. And gosh, how much has changed, right? Education is everything. I think both in software and in the payment side. And I agree with Aaron. Just to make a lateral move is not worth it on the software side, right? But if you're getting enhancements and a company that is growing with innovation, right, that's coming out with new things and you are able to grow, then it's worth making a look for sure.
What about, and I'll throw this at you, Mike, What about just trust and a relationship with the partner, with the payment provider in this case, or with any company? How far does trust and transparency go within a relationship as it aligns to the what technology they may fall short on?
Well, a story. I love to RV, right? I'm a big RVer, and I've been looking for a new hitch. And there's all these great big companies out there. Okay. And I found a guy that's a kind of family owned business. This thing was $3,500. But I built a relationship up with him and I trusted him because he really wanted to earn my business. And earning the business is everything. You want to be with a company that is working to earn your business and really trying hard to earn your trust. And that's really crucial. And I think that society has kind of moved away from that, right? The instant gratification. Oh, they're a big company. Let's, everything will be fine. I think that these a little bit more mid-tier players who are trying to grow their business and trying to earn their trust is just crucial in today's business world. But visionaries, right, who are trying to always improve upon what they're providing. A company like mine is not perfect. It's not. But what it strives to do is it strives to communicate with the customer to let them know what's going on and why this happened. And here's what we have done to rectify it. And I think trust and support is everything, both in your software, with my software, and what my service provides. And I think that's been lost. I go to a lot of storage events, guys, and everyone promises the sun, the moon, and stars, right? And they say, well, my price is just great compared to the others. But is it really worth it? Right? Yeah. My dad used to say, you get what you pay for.
Well, and you're right. In SaaS, it's a recurring billing model. So essentially, you are in a position where you have to earn your customers' trust every month because you're dinging their card for whatever you're charging them for and for whatever amount. From your end, Aaron, you handle a lot of sensitive data. It's really important you get it right on these migrations, whether it's a it's like 10 facilities or 100 facilities, whether it's 10,000 units or 80,000 units. How important is just trust, relationship, and alignment with the customers you work with?
Yeah, I mean it's essential. I mean, anytime you do a migration, whether it's small or large, and no matter how many you've been through, you plan it out on paper and it all looks great. But as soon as you get into it, there's going to be hurdles and challenges. You've got to make adjustments. You've got to deal with problems, and you have to be able to have that open, honest communication between both the operator and the provider who's doing the migration to be able to solve problems and not point blame and just try and figure out how to get it done. Because at the end of the day, when you're in the middle of a migration, it's okay, how do we get it done in the most efficient manner possible? So yeah, for us, trust is everything. We're not a transactional business. It's not just a one and done project. We need to have that long term relationship there before we get involved, because that's what our business is built on, really.
And I like that, Aaron, not pointing fingers. And
Yeah.
if you do make a mistake, being able to own up to that mistake.
Yeah.
We did that with a partner on a product release that we did. Maybe we were just a week or two early in that product release. We just didn't have it right. And we didn't blame the customer. We took the blame, but we showed them what happened. And these are the things I really feel that are just lost on the industry at times.
Yeah. Yeah. It doesn't, I mean, mistakes happen, and it's not that the mistake happened; it's how you deal with it and how you solve it. Right? That's the big thing.
That's right. Okay, we have about 5 minutes left. I encourage our listeners to ask questions to either myself, Aaron, or Mike. Use that question mark icon on your right-hand side to submit those questions. We'd love to get those answered for you. And in the meantime, any last thoughts, guys? Any stories? Any good story? We all love stories. Any good stories? Horror stories? Happy stories that you want to share? That's related.
I've got one. One of our customers is in the agricultural sector, and guys, you'd be amazed just how big our farming is. And they came to us with a problem, and the problem was that their customers were unhappy with the payment experience, the support experience, but they really felt that they weren't getting value out of their payment experience. And in 1 year, we do these annual and these quarterly reviews with our customers. And in 1 year, we had over a $650,000 savings for their customers across the board. And it really felt great because they work on such razor thin margins. The farm industry does. And the technology, believe it or not, is pretty great. They've got some real sophisticated SaaS ERPs. This is a very large ERP. And to be able to share that savings, and that savings wasn't as much for the ERP, but it was for their customers. And then that was the best part about it, is having that savings across the board was a lot of fun. And the processor was a big name processor, just the big name processor, and it was great. It's a great story.
On your side, Aaron, just as far as maybe a payment migration, data migration, with ups and downs, but a happy ending, or any last thoughts on just folks on this call that are thinking about a migration of any type?
Yeah, I mean, there's always the fair share of horror stories and things that go wrong, but on the flip side, there's obviously more successes than failures, which is good. I think with any kind of migration, as long as you have open and honest communication with everybody involved, you plan things out, and you're committed to making it work. I think that's being flexible and just committed to making work is the best way forward. But yeah, a little bit of upfront planning goes a long ways, and then constantly reassess and adjust your plan as you go along, because you can't get it right on paper the first time.
Yeah, that's right. All right, we have a couple minutes left. Kind of brings us to the end of our session. So obviously a big thank you to our guests, Aaron and Mike, for sharing their insights. And of course, thank you to all of you for joining us and taking time out of your day. We hope this gave you at least some practical ways to think about your payment technology during a software migration, and just to avoid maybe some common pitfalls we uncovered that you didn't think about, or to uncover some real opportunities, whether it's to reduce costs, streamline operations, or just future-proof your setup, to reevaluate. Use this moment as a moment in your business to reevaluate maybe your strategy, your tools, or your partners. We'll be sending out a recording if you want to revisit anything we covered. And if you have a follow-up questions or want to continue the conversation, don't hesitate to reach out. We'd love to hear from you. In the chat, I've posted or am posting my contact information. Please reach out to me. I'd love to hear from you. And if you want to get in touch with Mike or Aaron, let me know, and I can certainly connect the two of you with them. And lastly, if you're going to be in Las Vegas for the Self-Storage Association conference, September 2nd to the 5th of this year, please stop by and see Storeganise at booth 617. We'd love to see you. and chat with you. Thanks again for being here, everyone, and we'll see you next time.